Alright, so as stated in the previous video, stock or equity in a company can be bought or sold in shares when a company IPOs or does an initial public offering, meaning they offer portions of their company to the general public. But where do these transactions occur? In this video, we'll simplify what the stock market is and the very basics to understand how it works. Quick disclaimer, I'm not a financial advisor nor a licensed broker. These videos are simply for entertainment and educational purposes, and discretion is advised. If you seek professional financial advice, I recommend going to your licensed broker to learn more about a topic. So, simply put, the stock market is the largest and most complicated public auction in the entire world. Every second of every trading day, shares of companies are exchanged between buyers and sellers millions and millions of times. But where are these shares being exchanged? So, while everything is automated in today's world, and it seems like these stock transactions happen magically in a matter of seconds, the truth is that your shares are being exchanged through what is known as a stock exchange. Simply put, a stock exchange is a real place where stocks are bought and sold. There are many different stock exchanges across the world, such as the NYSE for the New York Stock Exchange, or the TSC/TYO for the Tokyo Stock Exchange in Japan, for instance. But the idea that I want to convey is that your shares are being exchanged in a real place. With today's investing and trading tech, it truly feels like it all may happen through a simple website, but your stock is actually being handled by a professional and real exchange on the planet. So what happens is your broker gets the order for the stock, and that order is carried out through an exchange somewhere on the planet. But for now, don't dwell on the idea too much of what a stock exchange is, but just understand that your shares that you buy or sell are actually being bought or sold in some kind of real place or market, no matter how small your order may seem. So, cool, my transactions are real things. But you mentioned that the stock market is being an auction, right? How is it an auction, you may be wondering? So, the stock market is called the stock market because it is a marketplace for stocks. I know, complicated. It is a place where stocks are bought and sold. But there isn't just one listing price for a stock, right? Stocks prices can change almost every second of the day. This occurs because real people are trying to sell or buy that stock at any given moment and get a good price for their orders as well. Now, think about this for a second. If you've ever been to an auction, you'll see that if you are trying to sell something, you want the highest possible price. But if you are buying something, you want the lowest possible price. As the stock market is run by real people buying and selling stocks, meaning if one day no one decided to trade, the stock market would flatline. When you want to buy a stock, you are literally buying shares from someone else that owns it already. That person you are buying from will want to get the highest possible price from you as they can, and this price is known as the ask price. They are asking a price from you. As you can guess, the seller will sell to the highest bidder since they want to make money. If the price you are saying you'll buy for, also known as the bid price, matches the ask price, then you have essentially closed a mini deal. Here's a little example. Let's say Bob here is saying that he wants $5 for his shares of stock XYZ. So here he's saying, any takers? Jim offers $4.75, which is 25 cents per share below what Bob wants for his stocks. But Bill over here wants the stock really, really bad. So he's offering to take 10 shares also, but at the ask price, meaning the ask price is this $5 that Bob was asking. Bill will get the stock because, well, he offered a higher price and it matched the ask price that Bob was asking. So every time you place an order to buy or sell a stock, You are essentially buying and selling to and from real, actual people. Many people are confused at first since this whole process can sometimes be done in a few seconds, if not less. Don't get confused though. This only happens so quickly since there are literally millions of people investing or trading every single day. Therefore, there is a demand for your stock, albeit whether it's a high or low demand, there is still a demand. So, in the end, it's all a game of supply and demand. If the demand of a stock is high, this will drive the price of the stock upwards, because more people want to buy it. Again, remember that there is not an infinite amount of shares to be distributed. There is a limit to the number of shares, so as the demand goes up, so does the price of the stock. If the price was too cheap, those shares would be sold out in an instant. Quick note, something I will get more into detail later is institutional investors and traders that essentially do something called high frequency trading. So while the stock market is composed of actual real people doing it, like you and I, a large portion of it is also computer algorithms at trading firms, and these trades happen at very, very high frequencies. They are trading with large sums and pools of money. Essentially, those are called institutional traders. Therefore, your shares could be sold or bought to a computer algorithm for all you know. But again, these companies are known as institutional traders, and we everyday folk are known as retail traders. So just know that you and I are not the only ones trading, but there are also big professional companies doing this at very, very high speeds with computer algorithms. So to recap everything, the stock market is essentially the world's largest public auction for retail and institutional investors and traders. When we want to buy or sell a stock, we are actually buying or selling from someone else. The price goes up or down based on the supply and demand of the stock, and the seller will always try to get the best price, while the buyer will always try to get the lowest. These ask prices and bid prices cause the stock price to fluctuate, which then triggers people to either buy or sell during the market hours. These shares are exchanged through a stock exchange, but don't be scared. Most of your time, the broker automatically chooses the exchange for you. So again, it's an auction. There's real and big companies trading. You're trading with actual people, and know that it's basically a whole thing of supply and demand, and the stocks that you are trading are traded through a stock exchange.